Okay, well, good morning, everyone, and a pleasure to be back here again for GTR 2022. And it's really heartening to see so many people sitting in the hall today. So I'll go ahead and begin by, doing some short introductions to our esteemed panel today. So we've got on the far right, Piyush Gupta, CEO and founder of Polytrade. He's got 8 years of trade finance experience, and his organization is focusing on post-shipment receivable financing. So he'll be talking to us a lot about that. Next to him, we've got someone who's no stranger, Carl Wegner, CEO for Contour. Carl has 30 years experience in Asia cash management, institutional banking, supply chain, and ledger technology. He's also served as the R3 Managing Director for Asia. Welcome, Carl. Next to him, we've got another person who's no stranger, Syed Hassan. He joined GIB in 2017 as head of trade finance. Prior to that, he worked with Lloyd's Banking Group and with Citi as a director in trade, receivables, and supply chain finance. And next to Hassan, we've got Betül Kurtulus. I hope I got that right, Betül. She is regional director for Central, Eastern, and Southeastern Europe and Middle East for FCI. She started her career at Anderson Consulting and joined the factoring industry in 1992 and has 30 years of experience. She's also served as a board member for the Association of Financial Institutions of Turkey. And last but not least, Farooq Siddiqi, CEO of dltledgers. It's based out of Singapore. It's a blockchain enterprise focused on cross-border trade and supply chain digitization. His last role was at SCB as their global head of trade finance. So with that, we will kickstart, and I've got the easy bit today in terms of asking the questions, and these guys have the hard bit of answering the questions. So trade, and when we look at trade globally, and especially in the environment today, we're coming out of the COVID crisis. It's been 2 years, and it's had a lot of impact in terms of countries, in terms of corporates. But we're starting to see that this is perhaps the beginning of the end, so to speak. When we pick up, many publications, or we look at, the research done by organizations, multilaterals, we see that there's an expectation that trade is going to grow anywhere from 7, 10%, even higher in 2022. But with that, there will also be challenges. There will also be holdovers. And if you read the news today, or you listen to the news today, the two words that are used quite often are procurement and supply chain disruption and delays. So with that, there exists today a trade finance gap. And my panel will be discussing what that trade finance gap is in their view, and how their organizations are helping address that gap, and what are some of the key themes that we're seeing within trade. So maybe with that backdrop, I'll start off with you, Farooq, and ask you, does a trade finance gap really exist? And if so, is it across the board, or is it limited to certain segments?
Thank you, Yusuf. It's a pleasure being back in Dubai after so long and seeing so many familiar faces face to face. So I'll do a bit of a double click on the trade finance gap before I get into you answering a question. So I think, yes, if you look at all the reports, and everybody has read the ADB report, that trade finance gap exists. It's a large one. It's about $1.7 trillion. It's growing in fast double digits. So that's kind of a given. If you look at it geographically, the gap exists mostly in the less developed markets across APAC, LATAM, and America. And in more developed markets, because you've got a developed credit insurance market, a developed credit bureau, you don't see that gap as much. When you look at it from a segment perspective, it's not that the gap exists only in SME, it actually exists across the board. So even MNCs at times struggle with getting funding for their trade. but the size of the gap is the deepest and the biggest as far as SMEs is concerned. And when you look at the SME space, then what are the two fundamental causes for this gap as far as SMEs are concerned? And most of you guys who are bankers out there will appreciate this, that it's really about either it's risky from a perspective of credit risk, compliance risk, EML risk, fraud risk, operations risk, or it's just not profitable. So when you think about micro SMEs, for example, the ticket sizes are too small for banks to actually make this into a profitable business. So most banks, as part of the strategy, you think about, for example, some of the larger global banks may not get into doing things which is deep in SME primarily because it's not profitable and the risk reward equation doesn't stack up. So then what do SMEs therefore do in terms of plugging this gap? They'll probably try to fund it from their own sources, they will go to friends and family, they will go to the money lenders, and now increasingly they're going to alternate financiers. So that's kind of the flavor as far as the trade finance gap is concerned. Based on what I have seen so far, talking to a bunch of people, when you look at exactly which are the segments where this gap exists, first let's talk about the supply chain in terms of where gap exists within supply chains. So typically, the long tail of suppliers are the guys who struggle the most in terms of getting access to funding. So many of the banks sitting here who are doing supply chain financing programs, they're pretty happy doing for category A and B guys, but when you come to the smaller ticket guys, the thing is that it's just not profitable or KYC is too much of an issue, so the long tail of suppliers gets kind of lost. The second in the context of supply chain is to do with category or tier 2 or tier 3 suppliers. So if you think about organized supply chains in automobile or technology or electronics, the category 1 and the category 2 or the tier 1 or tier 2 suppliers are really big companies in their own rights, have no problem getting it. But when you go deeper into the supply chain, what you discover is that the guys who suffer from getting access to funding is really this category 2 or category 3 of suppliers. Then you kind of think about it that we talk of SMEs mostly from a perspective of SMEs which are producing stuff, but increasingly the world is moving towards services. So I don't think too much of a spotlight has been given on service SMEs. So you think about sectors like maybe contracting, logistics, courier, various other services. So you'll find that as these service sector SMEs go up, it's a big gap as far as these service sector guys are concerned because they don't really have an asset to pledge. Then you switch it to talking about non-organized supply chains. So in the context of non-organized supply chains, you can think about SMEs in two broad categories, either a manufacturer or a trader. Manufacturers, basically they have collateral and stuff, so banks are happy to kind of give some money out, but especially if you're a pure trader, and especially if you're in things like commodities, you will struggle because your leverage is too high, you don't have capital, you don't have collateral to give. So that kind of gives a bit of a flavor in terms of what's happening in this space. And the last thing that I'll touch on in terms of a segment which is underserved is what I call the unorganized sector. So if you're part of the organized sector or part of organized supply chain, your probability of getting funding is quite high. But if you sit in unorganized sectors, which is very true in many of the less developed markets, think about cottage industries or think about the mom and pop stores or think about unorganized retail, these guys really suffer. So in a nutshell, I mean, before I tee up in terms of how we can potentially solve this problem, what I will say is the gap exists. It exists across the board, and it's really a question of lenders and financiers finding out how do they improve the risk quality as well as the profitability to make it a bankable proposition. So that's really the context I would give Yusuf.
Farooq, thank you very much. Very, very detailed, and appreciate that. But if I just take that thread a bit further, so Farooq talked about the SME sector. He talked about various categories within the SME sector, and I'll get Hassan's views from a banking perspective. But Piyush, do you see this gap being closed, and maybe you can talk about your organization and how that is actually having a direct impact in terms of closing that gap.
Thanks, Yusuf. So I think Farooq has touched base quite detailed. What are the gaps and where they are existing and prevailing the most. But let's look at some statistics first. So you rightly said about the gap which is increasing, and we have ADB said that by 2025 we are witnessing $2.5 trillion gap, right? And it's pretty interesting if you see there is an inverse linear relation between large caps or the multinationals. And the more you go down the tier, the availability of credit and the cost of credit keeps changing constantly, right? So I still see in my last 8 years of experience, SMEs were the biggest losers in this space because the rejection rates were too high. It was because of lack of information about them. It was because their ticket sizes are too small. It was because the time consumed by a lender on a smaller invoice doesn't fetch him good returns. So he's tend to go to the larger corporates for looking at larger invoices. Now, is the gap closing? For sure, banks should be front running that because they have the largest liquidity available to them. But we should also look at the liquidity available from other sources. What we are doing at Polytrade is completely looking at a different source of financing. We are bringing crypto liquidity to address this concern. And Polytrade has successfully did our first invoice financing just last week, where we actually took crypto liquidity and funded the real world invoice. So I would say that fintechs and more innovations are required in space. And Yusuf, when we were talking, I was laughing on this that for last 5 years, I think in every conference people talk about this blockchain initiative, what is going on. But nobody really came out with a solution. Or even if they are trying to come out with a solution, they are trying to address a lot of problems at the same time. Let's break down the problems. Let's look at one problem at a time. Let us try to bring most of the data on chain so that there is more transparency, there are lack of, less frauds, less issues which banks face about, dual financing, multiple financing of the same invoice. So our aim is that in a couple of years, we would want to bring most of the invoices on chain. And that means logistics will follow, insurance will follow. And then, the lot of innovation can come in. So in 7 months, if we can do our first invoice financing, banks have all the resources and infrastructure to do so. So I would say banks should lead it, but at the same time, companies like us should take a leap and do it more often.
Thanks, Piyush. Hassan, so one theme that is common is, that maybe banks are not doing enough to support the sector, right? And even if they are supporting this sector, the costs seem to be very high, right? And it's very, very selective. So, but we're also seeing that banks are also partnering up with fintechs. There's strategic JVs that are taking place. And especially it becomes pertinent for this region, where in many countries, SMEs make up 60 to 70% of the economic backbone of that country. Can you give your institution's experiences, what you're seeing, and how you are proactively addressing this, or not?
Yusuf, if you remember, we had the same level of conversation post-2008. The results or the trends were exactly similar. The first to wipe out, or lose access to capital were the SMEs 11 years ago. And unfortunately, they are the same now. The reason being banks' models, and you and I and we all understand, they do not differentiate a large cap to the extent, it should be, as opposed to SMEs. So at any stage, SMEs either are at the bottom line of the risk profile within a bank, and the moment a pandemic or something comes in, the red list is created, all the SMEs are, deprived of the liquidity. This is what has happened, and that has resulted in the trade finance gap. So in my view, we have been looking at, constantly in the EAPAC and this region particularly, is through a different angle. And what Europe, I think, post-2008 had, they looked at because these SMEs supplies to large corporates or the government. So the largest buyers who they work with either are the municipalities within the government itself or the large corporates. You speak with any or pick up any of the SMEs, they'll tell you that, the cash, and obviously the cash conversion cycle remains the biggest problem. And that's what kills or, breeds the SME. So then we said, okay, let's learn from this example and put together, and that's where we started with the products like supply chain finance, which went up. But again, the problem one is the appetite, which could be. The second for banks is the reach. We're still paper-based. So irrespective, whatever we say on the digitization, it's still not been covered. So these SMEs, and this is where I think Piyush and obviously Farooq comes in. And I'm very glad because we discussed that this panel 5 years ago used to be all bankers. Now we have a combination of obviously all of us. So I see a brighter side. Plus, I'm very hopeful in a frank perspective because of the ESG factor. While a lot of us stops at the environment thing, I'm waiting for the social part to kick in. And I think this is where we will be pushed because we would have access to cheaper liquidity as banks because ESG compliant. We will be pushed to get on and include the smaller suppliers in the equation. I'm personally doing so, but we are very, very initial stage. I think this is best. I think, and this is where the collaboration between banks and the fintechs is coming in. I think we have spoken this in the morning with all of us. Earlier on, fintechs were taken as the competition, and this is about 5, 6 ago. Now, in pure sincerity, fintechs are considered. You are doing it, we are doing it, everybody doing it as partners. We know it will not work if we both, keeps on fighting with each other. So I think that's where the gap is, but we have to see this from a different angle. We have to see this from the eyes and measure this under the risk of a large corporate or government. If we go by the SME led and we see them as a risk, this will keep on following under the same trend as we have seen in the last 15 years. There's no other way.
Very interesting. Thank you. Thank you for that perspective, Hassan. And I guess one of the, banks or fintechs also need an enabling environment as well, right? And the role of the regulator becomes critical. So, Betül, if I can ask you to maybe come in and maybe comment on how do you see, are regulators really playing a proactive role in this space, and does it depend country by country? Or are you seeing a general, trend in that direction? And, your focus in terms of, structures like factoring, for example, et cetera, are they helping to close the gap that currently exists in the SME space?
Thank you, Yusuf. First of all, it is my pleasure to talk about the trade finance gap right after the publication of the factoring law in the UAE, because it came into effect on last December. So it is a very new. But before going into detail of the factoring law, I would like to speak about who we are, who is FCI, how we are supporting the regulation and infrastructure of the countries for the receivable finance world. We are the biggest association representing the receivable finance. We have operation in 92 countries with 400 members. What we are doing, of course, we are the owner of the general rules of international factoring, and we are, of course, working with the regulators, Ministry of Finance of the countries to support the infrastructure, which is very important to close the trade finance gap. So lately we launched 2 new products under FCI, which one is reverse factoring solution. The other one is the Islamic International Factoring. What I'm hearing from our members and here in clients in MENA region, Islamic finance is becoming more and more important. Usually the clients are preferring to finance their trade receivables not on a conventional way, but more on the Islamic way. Under FCI, the general rules of international factoring describes how you structure your open account trade. So we are not on the financing side, we are just structuring the trade with the international rules, so it is very easy to finance this structure on a conventional way or on an Islamic way. So it is, the product itself is very Islamic, which opens to corporates to use this product to finance their trade finance gap. So we all know that the UAE is a trade finance hub. It is the 17th biggest country in the world, so trade is very important. But the question is, despite the facts of the importance of the trade, and the huge trade finance gap. The interesting question is why the financial institutions and the corporates do not use this product to solve their day-to-day financial needs. So maybe one of the reasons was the lack of the regulation, because before the factoring law, if you have any dispute or any disagreements with your clients, you need to go to the civil court, which of course was not that helpful. But the Ministry of Finance is working on not only the factoring law. Before the factoring law, there were some other laws like leasing and movable, the UAE movable security laws. So they are, with these old laws that came into the effect, of course it helps the modernization of the trade finance world in the region. I'm working with more than 40 countries. I must say that the law of the factoring of UAE is one of the best. It is really clearly defines of the rules and rights of the assignee and the assigner, and also it gives the right to have the all the future receivables, the assignability of the future receivable, which is very important for some of the sectors like construction, and it gives of course the CFOs to a very widely open way to finance their receivables on different sectors, and also it describes the different products clearly. Explains the different products of the like recourse, non-recourse, reverse factoring, everything. And it is interestingly covers and gives the rights to not only the assignment and also the other rights of the receivables. So it is normally you need some other additional agreements with your clients or with your financial institutions to have these rights, but the new law of UAE covers all these rights and gives these rights to the financial institutions, which is very, very good. So I think it will help financial institutions to use and close the trade finance gap within the country.
Thank you, Betül. And Carl, you've got what, 30 years experience here on in terms of whether it's supply chain finance or sort of technology, etc. And I think one of the greatest sort of events that has taken place in this industry is, of course, the proliferation of fintechs and the harnessing of technology, really. And how do you really see that sort of, if I can use that word, democratizing trade and providing that access, basically?
Yeah, it's a great question. So technology, fintech's technology. Technology is an enabler. It's not that banks or alternate financiers don't want to do financing. It's just that they're not able to. Well, what do they need? So it's first efficiency, right? So efficiency that if you put technology into it, you digitize it, a small invoice can be efficiently managed and submitted for financing. So for efficiency. Second is veracity, right? How do you verify that information is correct? And that can be used as a blockchain sometimes to blockchainify, for the lack of a better word, that information earlier in the transaction, so you know that that it came from the right source and it's the right information. And the third thing is availability. And that's the real key thing to democratization is availability. Now, the internet is a great leveler, right? You can level that playing field. If someone has access to the internet, they can use these platforms. And so I think the challenge is for fintechs is the regulation part is one, but also how do you make, especially using blockchain. Blockchain is it's an elegant way of managing databases. You don't always need blockchain, but blockchain is good because of regulations. So blockchain allows you to manage data according to different regulators' needs depending on different countries. But blockchain is an elegant and expensive way of managing data. So the key is how can you use blockchain and make it cheap enough for the SMEs to come on board, right? You have to have a product that can be almost free for the SMEs to use. Yeah. And if it's onboarding can be automated, right? They can do online. The cost is almost free. Then all of a sudden, all these SMEs have access to a new world of financing, which can go to the banks, which can go to alternate financiers, and that's one of the things we're doing is actually we're rolling out making the platform more available to SMEs by figuring out a way to make blockchain more efficient. But I think the key is availability.
Thanks, Carl. Maybe I'll just go to the floor. Vince, do we have any questions from the audience?
Sorry. Yes. I have 3 questions, but I just want to ask one right now. And sorry about this. Is big increase in services, as the comment was made. Does the panel or anyone on the panel see a role for standby LCs as a backstop covering the services? Number 1.
If it's efficient, right, it's the same thing, right? Standby LC is a great product, but if you don't automate it, you don't make it efficient, then we're back to the same thing again, back to paper. I don't know any other.
Yeah, the banking instruments need to be evolved a bit. Right now, it's too much paper-based processes, too many confirmations required manually. I mean, these things need to be automated to make these instruments useful.
Okay, very good. If I might just add, the value of standby LCs in the world now is larger than commercial LCs. That'll shock you, okay? And you'll hear from IFC tomorrow that their volume of standbys being issued is increasing very rapidly, but that's tomorrow. Second question is, some financial centers and some big names have been charged with fraud. Tech made a big promise to end all the fraud. Has it kept its promise?
Can you just repeat that again? The question?
Some financial centers have experienced significant fraud last year, I guess, and some big names. Technology promised to solve this problem or to end this problem. Has technology kept its promise?
Okay, if I have a shot at this, I will say partly. I think if somebody's out to fraud you, they will find elegant ways to kind of bypass whatever tech you do. But technology clearly allows you to take care of a number of things which are today manually oversighted, or you need some kind of a AI or a rule-based engine to catch stuff which an eyeball can't. So to answer your question, I would say partly it does, but it's not going to solve for it 100%.
Okay, please.
So frauds will happen and keep happening till there is greed in the world, right? No technology can, take away the greed from human consciousness. But interestingly, if we remove the intermediaries from the chain, and Yusuf, as an individual, you are sitting on dollars in your bank, not yielding anything. If I tell you that, can you create an impact on the society by funding SMEs directly? Would you want to do that? You rely on banks because they take care of that security and frauds and all that, right? But what if the technology enables you directly to participate into those assets? You are going to get yield on your money, and you are going to take care of the frauds by yourself, right? So the greed ecosystem will slowly dissolve, probably.
Great. Anyone else?
I think,
yes, please.
I just had one point on that. I think, the frauds which we have seen last year were a combination as a result of regulation, missing regulation, and the manual part. I think both have been solved in a way that, the BOE discounting, particularly what you're referring to, were forged. And now we can track back if this is the register, because the instrument is being registered now in certain jurisdictions. The jurisdictions were, I also have to look at, these were the aggregators, so, what prompted those. So I think, as a banker, I think the solution partly is there and it's in the right direction. Pretty satisfied on that.
Great. And just to clarify, they're not my questions.
Just, Vince, we've got one more.
Go ahead.
I would like to add something on the fraud, because fraud is fraud, so it is in our life, and sometimes we face with really big frauds, especially on the receivable finance world. But what I'm seeing in the country is that the global registry system solves many of the frauds, prevents the double assignment, prevents the double financing. So here in the UAE, there is a mobile registry system which prevents the frauds, I believe. and you can also register your receivables in that system. It needs to be globalized and supported by the law, because it's when you register all these receivables, so it really prevents and decrease the possibility of the fraud cases.
Great, great. And they're not my questions, by the way. Jeff is down here somewhere texting me the questions that are coming in on the app. But Yusuf, I have another one. May I ask?
Please.
It's the trade finance gap is really in emerging, developing, poor countries where tech is at a low level. What to do?
I think if you look at that understanding of the trade finance gap, the piece around the fact that when we talk in the low developed markets, it's a function of financial inclusion, where clearly a big chunk are unbanked or underbanked. And to the extent that if I go back to what I fundamentally said first, that you have to solve for the risk and you have to solve for the profitability. And both have to be solved for to make it a sustainable proposition to lend. I think technology definitely has a role to play, regulation and what we are talking certainly has a role to play, but this can't best be a preserve of the banks. And I think that's where you see alternate financiers, digital financiers, platform financiers, partnerships coming up, which is going to help solve for it. So maybe I think it's also a question of how banks look to partner with other people within the ecosystem to try and attack the problem together.
Thank you very much, Yusuf. Anyone else have a question from the audience? We can take it, Yusuf. Yep. And just regarding the trade finance for the poorer countries, the emerging poorer countries, tomorrow you'll hear some great success stories, because we'll be hearing from the IFC and the EBRD, and despite all the challenges, IFC increased their, I don't like saying the word business, I say their supports of poorer countries by 100% last year. And this is one of the things that drove the increase in standby LCs, but that's a story for tomorrow. And then, Yusuf, we have a wise guy or a wise lady, I'm not quite sure, in the audience, because you mentioned that it's the beginning of the end, and someone said, well, I think it's the end of the beginning. Okay, so work that out.
I guess I need to work on my...
No, it was perfect, perfect, absolutely, perfect.
Yes, Carl.
I would just say, I mean, we're looking at fintechs to solve a problem that's been around for a while, and it's a partner in it, but it's a journey. And I think this is the key thing. You see IFC, EBRD, Asian Development Bank, supporting, again, not making business, but supporting these developing countries and the SMEs. But it's a journey. To digitalize is a journey. And I think this is what I think everyone has to understand, is that step by step, you're not going to have everything digital tomorrow, and people say, okay, I'll start when it's all ready for me. Well, it's never going to be all ready, right? And there's going to be different platforms, right? There's going to be different systems. And if we wait for everything to be perfect, we'll never start. You think about, we have Teams, we have Zoom, we have Skype, right? If for the last 2 years, if everyone said, well, I'm not going to use any of those systems until they're all integrated and they all work together, no one would talk to each other for the last 2 years. Right? So there's going to be choices out there. There's going to be, but I think it's the key thing is the journey to start, because everyone that starts will learn. And you learn, and the banks learn, the corporates learn, the governments learn, how to start this digitalization and continue this digitalization journey.
That's a great point, Carl, and thank you. And it perhaps leads us nicely into the last few minutes of this panel discussion. And maybe I'll ask each of the panel members to just give a very short, view in terms of what they see as perhaps the future trends. Are we looking at a complete reinvention of trade? There's been talk of inclusion. There's been talk of, investment in technology and how that's going to shape our future, and that we will continue to evolve. But I'll start with you, Farooq, and then perhaps you work our way down. Thank you.
Thank you. I think in terms of trends on trade and supply chain, if I had to pick the top 4 or 5 trends, I think the first one, which is really topical nowadays, is resilience. So people have stopped talking about supply chain optimization or economies of scale. Everybody's talking about resilience of supply chain and safety of supply chain. And that's really a big theme post-COVID, which is kind of coming up. Linked to that, what you're seeing in terms of supply chains is supply chains are starting to contract. So if you think about the length of supply chains, you're trying to reduce complexity within the supply chain. So actually, you think about near-shoring, local sourcing, on-shoring, localization. They're all themes which are really driving the shortening of the supply chain. So if increasingly, you're going to see shorter supply chains. The third thing which is coming up in the context of changes in consumer behavior and buying patterns is the whole piece around establishing the provenance and the traceability of supply chains. That's a big theme. So you think about organic food sourcing, you think about agri, you think about consumer products. The whole piece around traceability and provenance is going to be a big theme in supply chains to come. The fourth theme is, which is very topical for all of us post COP26, is the piece around ESG and sustainability. So when you think about some of the ESG frameworks around whether it's being driven by regulations in many markets like in EU, or it's being imposed by governments like the US, or industries like in palm oil, for example, have their own standards, the whole sustainability theme within the supply chain is going to be key. Obviously, we touched a little bit about the digital trends in supply chain, and I think you're going to look at it in two parts. Tactically, the technology is going to help reduce friction, improve efficiency, reduce cost. But strategically, it's going to enable businesses to create what I would call data-led business models. So the future is really going to be about how people mine the data from their supply chain and create businesses and different types of businesses. I think technology will also help establish the trust element in a supply chain and the fact that it will create that transparency. Also, technology will enable supply chains to move towards what I would call marketplaces. So in this whole world of bilateral one-on-one, I think increasingly you're going to see what we call traditional B2C businesses also getting replicated in B2B platforms. So increasingly you're going to see the emergence of that as a key theme. The final trend I'll touch on, which is topical in the context of trade, is what's happening on trade finance trends. Some have been touched on. I think, Yusuf, you spoke about democratization, which will obviously be, so the future is going to be about trade as an asset class, tokenization of trade, creating of exchanges on trade, and anybody who's got money to invest will probably do that. I think from a perspective of banks, most banks are going to move towards a model which is built on balance sheet velocity rather than holding stuff on the balance sheet, because it's just not profitable to do so. So a lot of the progressive trade banks will create more and more balance sheet with solid velocity and create scheme on their balance sheet. And finally, in the context of platform businesses coming up as a key element of the world of trade. Those would be some of the themes I would touch on.
Thank you. Thank you. Betül, very quickly, few final thoughts on what you see as the future.
I agree with what you already said. I think we already faced with the supply chain constraints during the pandemic, difficulties of supplying goods from the far countries, and also the fluctuations of the transportation costs. So we are seeing that the countries and the companies prefer more to supply their goods for the closest place. So this should of course affect the trades between the countries. So this is important for the supply chain finance world. And also what I'm seeing for the region countries, the second important thing is the diversification of their economies from the oil and gas sector. So to support the non-oil gas producers, especially for the SMEs, is very important. So economically, when I look at the UAE, it's just they are far away from this. The other countries are trying to support the non-oil producers, non-oil SME sector, but here it's quite far. They already structured this support. So what I would like to say, there is a solution for the open account, and the peers of the financial institutions and the corporates are already using in the developed countries of the Europe. So it is open for all the receivable finance world.
Thank you. Hassan?
So Yusuf, I think from the bank's perspective, what we have largely seen, and we have concluded today as well, that while the other sources of liquidity are there, but there's still a drop in the ocean. Banks are holding up where it comes to the appetite and all these things. So in my view, what's happening, earlier on when we were investing on digitization, this was driven by each organization's ambition now it's driven by customers. I have customers, they said, I don't want paper. If you have a digital solution, I'm opting to come on board. Otherwise, I have other options. So that's what we have experienced post, pandemic. And we discussed SBLCs. The reason it has gone up because, of course, it's the first which is digitized among the traditional trade. We do not have that option, and I think, it's a need at the moment. What digitization is bringing in, it's attracting other investors, which still treat trade as a low risk as opposed to other investments, and hence, self-extinguishing, investment from that perspective. So in order to diversify their investments, they are bringing in, and that will open up, hundreds of millions of dollars for us to then reach out to the deprived areas and, developing countries and so on and so forth. Heavy lifting still needs to be done by us and the multilaterals like IFC. I completely agree. We cannot do it independently. Fintechs are, we also understood fintechs are only going to provide us the service which would enable us to decide in an improved way. So it's a decision-making tool for us and the reach. At the end of the day, it's my money as a bank perspective, and it's my loss. So if that's justified, coupled by regulation, I think there's great hope, in the future.
Thank you. Carl, Piyush, 30 seconds.
Yeah, for me, I already talked about the journey. I think the key thing is start now, right? Start as soon as possible. Don't wait, because we'll be learning as we go along.
Yep. So I just quickly, I don't like the last question, the tone of it, right? There is no poor nations and rich nations, right? Let's talk about decentralization. That's the coming trend. Borderless economies, borderless nations. It's a global problem to be solved globally together. I guess that's my takeaway.
Please give a big hand to the panel. Thank you very much.